FOMC. You ask for a miracle, we don't give you the FBI, we give you the FOMC. Game changer today. New chair, Kevin Warsh, will be tested. Will he reveal a new structure, a modernisation to the Fed? That was just suggested by our admin on Discord, William, in our private Discord event a couple of moments ago. We have the cheat sheet. We are ready to go. We're going to bring you the event live, and then we have the conference. That's the most important thing. Everybody and his dog thinks we're going to get a rate pause. But the terms, the analogy, the expression, the wording, the way it's presented, that's the important part. That comes right after the announcement. Get ready. Tap the like button. It's FOMC Day. It's a brand new era, a brand new change. We now have something that we can enjoy for the next several years. That's right. Kevin Warsh is in the house. Things are about to change. Good or bad? We'll find out in a second. Get ready for the FOMC report. It's showtime, everybody. It comes up right after this. You knew it was coming. If you're watching live, put the kettle on, tap the like button. I just mentioned to everybody that I'll be on Discord right after this. Of course, I won't. There's no Discord after the show tonight, after closing bell, because I'm watching the football. You'd have to join me on Instagram if you want that. Right, that's it from me. I'm out of here. Let's get ready. Woo! It's showtime all day. 6 hours I've been live, and we're going and we're ramping it up. Let's get ready to rock and roll. It's FOMC. Hit the like button. Hit subscribe. I'll be back after this. Here we go. Let's do it.
Oh, that was fun.
Well, thanks for making us feel like
FOMC, we have everything for you. One, we have the rate decision. That comes in 20 minutes from now. In fact, slightly less than that, actually. 10 minutes. I've just noticed my clock has broken again. Yeah, we live in a digital world and my clock keeps breaking. It's because my screen keeps freezing. Anyway, we have just 10 minutes before the rate decision. I've got CNBC and Bloomberg plus my own data ready to go. We also have, they're on a commercial break. They always are. We're also then going to go to, we have a cheat sheet. And then right after the rate decision, we actually have the conference, and then we have Sensei or Vaz will be going live right after that, because I won't be doing a closing bell show. Change of plan, because to keep this, because this is going to take us up to the closing bell. Sensei or Vaz will cover this, will go next, and then I'm watching the England football team play in Dallas, which is just down the road from me. All right, 10 minutes from my house. All right, so there we go. Let's get ready to rock and roll. So I'm going to start by doing something odd. I'm going to start by fixing my screen. So let me do that first of all. Apologies for the technical hiccup, but there it is. Stuff happens live. We have procedures and backup procedures for power, internet, screens, cameras, lights, everything. And more often than not, I employ my backup procedures, and hopefully you don't notice. Well, you do, because I tell you about it. That's the trouble. I should probably not say anything. But anyway, I do. Right, we're back up and running. Yep, everything is working as it should do. You didn't even notice, did you? All right, so it's 12 minutes ago before the rate decision. We are expecting, of course, a rate decision to be a pause, but it's what the new Fed will say. That's the important part, and how they will treat him at the conference. That's what it's all about today. So while we wait, we got 10 minutes, and then we'll have some time before the conference. We've got time to go through our cheat sheet. Now you will see pinned up the top of the channel, in the pin at the top, you will see my trades, where you can access me 24/7, one-on-one support, all of my trades. There it is in the chat. Plus, you'll also see the cheat sheet, the newsletter cheat sheet. All right, there it is. You can get that right now. The FOMC cheat sheet in our newsletter. 25% off. All Discordians, you've got your own link as well, remember, in Discord. But for everyone else, there's a 25% discount for you if you want to get the cheat sheet. So let's go over to it now and start getting ready from our very own award-winning newsletter. Let's start by getting everyone to tap the like button. We need 100 likes in 1 minute. You ready? Let's get the music. Let's pump it up. We've got 400 watching. Sod it, 150. And then I'm going to give you the cheat sheet. So here comes the funky music in 5, 4, 3, 2, 1, go. Tap the like button, everybody. We want 150 likes in 1 minute. We're getting ready for the FOMC report. We've got live cheat sheet. We've got analysis to follow this with Sensei or Vaz all the way through live. We've been live with you since 6 o'clock this morning. It's now coming up to 1 o'clock. No breaks, no gaps, all the way through. We had a Dave Ramsey rant earlier on. Now we've got the FOMC. We had a Discord event in between. We had Donald Trump going live in between. It's been a record-breaking day. And then we have to follow all of this. We have an event from Sensei or Vaz to follow with a breakdown of what you've just seen. Right, we've got 114 likes. We need a few more, 150, 121. We're nearly there. FOMC's coming up. We've got the numbers on the screen. We're going to share it all with you. You got to be quick. 403 watching. While you're here, consider subscribing, becoming part of our family. Everything here is live, everything is real. It's the most honest channel on YouTube TV. You're watching my real trades, my real positions. I've got $900,000 in total invested. I'm all in with margin, all in on one stock. I've gone all defensive. I'm very confident of that. There we go. 126 likes. We need 150, 134. We're nearly there. We're nearly there. 16 more likes and I can go straight into the news, give you the cheat sheet, give you all the information. 135, 15 to go. Come on, everybody. 15 likes, smash it. 409 watching. It's easy to do, but remember, 50% of you aren't even signed to Google. That's why it's not as easy as you think. 136, 14 to go. 138, 12 to go. The music has finished. I'm about to go into the cheat sheet. I really want to get it done. We always get it done. 147, 3 to go. We can do it. We're not giving up. 3 more, and let me bring you the FOMC Decision Day, Warsh's first test, cheat sheet. Let's do it. We got there. Congratulations, and thank you ever so much. Here is the cheat sheet. This is available for you right now, and you can follow along with everything so you are prepared. You can win today. It's easy to make money. The hard part is to keep it. All right. A lot of people chased. We had Ross Gerber. We had Ron Barron and a YouTuber called Meet Kevin telling everyone today to start buying SpaceX. It's the greatest meme stock of all time. Well, what happened? Rubbish. It went down from 220 to 199. It actually went down to 190. Utter nonsense. These people are all influencers. They own it themselves. They talk rubbish. They don't care about you. They care about more money, billions of dollars. I don't have any money. All I've got is what you see on the screen. I mean, that's what I've got in my entire life. I'm here to help people and tell you the truth. All right. So I've gone defensive. I'm not buying SpaceX at $220 because Ron Barron, who bought it for 10 cents, told me to. Utter rubbish. So 6 minutes to go. Here is the cheat sheet. Everyone, you can get it. I've given you the link to everything you need. You can follow, you can get all the one-on-one support on Discord, plus the newsletter. There it is. The question everyone is asking. These are the questions on everyone's mind today. Each one opens with the short answer, then explains the reality behind it. If you read something else, read this section. If you read nothing else, read this section. When it happens in your time zone, well, we know when it is. It's live right now. Will the Fed change rates tonight? No. We are very confident of that. A hold at 3.5 to 3.75 is near certain. Of course, we don't know that. We don't have a direct link with Kevin Warsh, but we believe that to be the case. About 99% on the futures, and it would be the 4th hold in a row. The decision itself is settled. The story is everything around it, the forecast and the new chair. What do we actually get tonight that we don't get every meeting? What is different about this event? Well, more than usual, this is the one of only 4 meetings a year that comes with a summary of economic projections. This is why it's so important. The SEP, which contains the famous dot plot, so tonight brings 4 things, not the usual 2 in the rate decision. The policy statement, the SEP with the dot plot, and the press conference. The SEP only lands in March, June, September, and December, which is exactly why a quiet rate decision can still be a major market event. It is the Fed showing its homework, where each official sees growth, unemployment, inflation, and the rate heading out to 2028. This is crucial reading. All of you have this right now in front of you if you have the newsletter and our cheat sheet. I'll drop it into the chat once again. 25% off for everyone who clicks on that link. Discordians, you have the link for you inside of your community, inside of Discord. We've got 4 minutes to go. We're ready? They're on a commercial break. They're always on a commercial break, these people. Number 3. Oh, sorry. I read number 2. Yeah. Number 3. Did I? Yes, I did. Number 3. Then why does tonight matter so much? 2 reasons. First, it is the first dot plot since March, the Fed's own forecast of where rates are headed. And that forecast is about 2 about to turn more hawkish. This is why I've gone defensive. Buying SpaceX like crazy was stupid. It's worth $50 to $60. The only winners is Ron Barron and people like that, and Elon Musk, all and those that held it from the beginning. Not you coming in paying $220 for it. Mental. The Fed's own forecast of where rates are headed, and all that forecast is about to turn more hawkish. The single 2026 Fed cut the Fed had penciled in as expected to disappear, and a few officials may now pencil a hike. Second, it is Kevin Warsh's first meeting as chair and his debut on the microphone. The held rate is the least interesting thing about tonight. I agree 100%. 2 minutes ago, number 4, you can read these for yourself. Everybody, please tap the like button. Have you done it? And consider subscribing. Thank you very much indeed. All right, get ready. So will Kevin Warsh just come in and cut rates? No. I'm going to shorten this down for you now. I'll come back to it in a minute. Then why won't the Fed cut when the president wants to? Because it's built to ignore that pressure. Just shortening it for you. We'll come back to these things in a minute, all right? Hasn't inflation been running hot? Yes. On the surface. These are the questions that you've asked through our community, through our newsletter, through Discord. We're answering the questions and through comments on YouTube to live videos, live events and videos. Hasn't inflation been running hot? Yes, on the surface. Number 7, 1.5 minutes ago. What exactly is the dot plot and why obsess over it? It is the Fed's own forecast, 1 dot for each official. So essentially, it tells us what comes next. As investors, we're always focused on what comes next. That's why I'm 100% $900,000 all in on Coca-Cola. Who is Kevin Warsh and what can he actually do? He is Trump's pick and the new chair. However, he's not going to be told what to do. He's already made that very clear. Number 9, does tonight actually change my mortgage, savings or job? Not directly tonight, but it sets the new direction. 45 seconds to go. Is the US heading into stagflation or recession? There are no signs of a recession in today's data, but that can change quickly. Later this year or next, growth is soft at 1.6, but is still positive. Unemployment steady at 4.3 and payrolls are holding. So there's no information in this report of a recession. When I talk about a recession and a crash, that's based on many other factors, not this. We'll come back to this in a minute. 15 seconds to go. Here we go. The rate decision is seconds away.
How the Federal Reserve moves. So yes, today is a monumental day.
It's time for the rate decision. We are live. Here it comes. And the answer is
yeah, and I think that's right. But I think the style is going to be important here, and I think he will try to avoid really signaling where he's going from here. He can't do anything about the balance sheet in the short run. That's a long-term project, and there are no easy choices. If you want to push up mortgage rates, you want to push up long-term interest rates, that's what happens if you reduce the asset side of that balance sheet.
It was 3.75. We are now 20 seconds late.
What kind of style and words that he uses, because it's happening all now. Steve Lees from the Fed's call on rates.
The Federal Reserve in the first meeting under new chair Kevin Warsh, Chairman Kevin Warsh, keeping rates unchanged in unanimous vote of 12-0. The statement, by the way, has been dramatically shortened to 4 quick paragraphs. It's about a third of the length of the prior statement. The easing bias was dropped as expected from the prior statement. The Fed reaffirms its policy, really answering David Kelly right there, of maintaining ample reserves. So no discussion really about changing the balance sheet, at least not at this point. Economic activity said to be expanding at a solid pace despite elevated uncertainty, the uncertainty linked to the conflict in the Middle East. They're noting strong productivity growth and capital investment. Job gains have kept pace with the workforce, the statement says. Inflation remains elevated relative to the 2% goal, reflecting the supply shocks that are out there. And then it ends with a simple declarative statement: the committee will deliver price stability. On to the forecast, where there's a lot more interesting things going on. And what is happening there, first of all, only 18 of 19 officials submitted projections. does raise the question about whether Warsh did not submit one, as has been widely speculated on Wall Street. We do not know if the person who did not submit was Kevin Warsh. There was a sharp upgrade in the funds rate projections. 9 officials now projecting a rate hike this year. 5 of them see 2 hikes this year. 1 sees 3 hikes. However, 8 are projecting the Fed to hold. 1 sees a cut. So the funds rate averages out to 3.8 from 3.4 from the prior forecast. A really divided Fed on this issue. On average, rates are seen at the current level of 3.62 next year, declining eventually to the neutral rate, which remains unchanged at 3.1. There was a sharp upgrade in both core and headline PCE inflation forecasts to 3.6 from 2.7 this year on headline, and from 2.7 to 3.3 on core. The core remains elevated next year. That might be important at 2.5%. So I'm recapping here. A unanimous vote, a much shorter statement, no forward guidance in the statement. They removed a lot of the vestigial stuff from the statement that was really, my opinion, kind of worthless about how the Fed will make its decisions. And they also show a divided committee when it comes to the outlook on rates. Brian, back to you.
This statement is so short, it's practically a tweet. I mean, this entire statement is 1 sentence, then 2 sentences, then 2 more sentences, then another, and then it ends. I mean, this is the shortest. See, this is the shortest Fed statement. This almost looks like a news alert.
Well, it almost looks like a Greenspan statement, if you really want to know. I did a calculation. I don't have it in front of me, but the statement number of words went like this. Came down under Powell, but it's now come down much more to kind of where Greenspan was. Simple declarative statements. They took out a lot of stuff that didn't need to be there. There's this thing that they would put things into the statement, Kelly, when they needed to put it in to get somebody to vote for the statement, and then it would just stay there for no reason at all. A lot of that stuff's gone. But what's interesting is that there is no forward guidance in this statement about which way rates are headed. That's the important missing sentence. That is something we're going to have to deal with and figure out. Maybe we'll get some more guidance or not at the press conference.
Fair enough. And maybe we will.
There we go. Let's wrap that up. Now, look at this. I was right. I'm sorry, folks. I know sometimes it gets a bit annoying when I say this, but Martyn's right again. There you go. My portfolio is held up today because of Coca-Cola being defensive. The S&P is falling off a cliff, already down 0.5%. Virgin Galactic popped up on this. SpaceX is now selling off. Great. I can't wait to buy it for $100, and I will. Palantir now selling off. Gold, uncertainty. Why anyone bought that today, I have no idea. Now selling off like a bloody off a cliff. Amazon selling off. So does Apple. So does Enphase Energy. Coca-Cola going up. Martyn was right again. Sorry, folks, but it is what it is. I've not lost on the market for 3 years. I've outperformed the market for 3 years in a row. If you want to see the numbers, let's put it here. Donald Trump will tell you the market is booming. Let me show you. Year to date, the S&P is up 8.6. That's the S&P up year to date. My performance up, if I go to stocks and shares and I go year to date, bearing in mind, Coca-Cola has crashed the last few days. I'm still up 11.4%, smashing the market. Yesterday, I was, I think, 30 to 40% up because I'm heavily in defensive, and it's all going to come back to me. This could be, when it turns, it'll be a 100 grand trade in one single day. No question, it's coming. I've not been right on my claims for 3 years. So there it is. Let's go through more. We've now got to go back to the, we're going to go back to the cheat sheet and go through it. And there's a lot more to digest. But right now, let's go through the positions. We will bring you the live conference when we are there. We are not there yet. All right. Okay, let me now go through all the positions. So we're seeing Apple go down, no surprise. Enphase going down because there are no rate cuts. Coca-Cola now is gaining speed, no surprise whatsoever. This could be $83 today, and if it is, I am up 100 grand in one day. Johnson & Johnson is also a defensive play, not as strong as Coca-Cola. That's why I don't buy it. my defensive play is, in fact, Coca-Cola. Chevron down, Tesla going down to $80 when SpaceX take over the company. McDonald's, a defensive, going down. Again, that's why I don't buy it as a defensive play. That's why I buy Coca-Cola. That's why, over and over again, I tell you why. Google going down, Microsoft going down, Meta going down, Nvidia going down. As soon as Coca-Cola makes me some money, guess what I'm buying, folks? Guess what I'm buying? When everyone's selling, I'm buying. Walmart going down off a cliff. Tilray Brands, no value, going off a cliff. Robinhood, insane. Who's ever buying that? No idea why you do that. Vertical Aerospace, up. Joby Aviation, up. Archer Aviation, up. Bitcoin, straight back down again. I told you where it's going. People don't like me to say it, but it is what it is. We covered live for you the Japan rate decision. We told you, we knew before it would be a rate hike. It was. Scammers, influencers told you it means that XRP is going to rally. It's a lie. It's rubbish. It never happened. Told you that. But anyway, the same people that predicted it would be $100 on New Year's Eve. That never happened. It's not going to. They just do it for clicks and nonsense. Right. My portfolio could easily be green today. We were down $12,000 earlier. Let's keep our eye on everything that you're interested in. So you've got Ethereum, XRP, Bitcoin, the S&P 500, and Coca-Cola and short-term treasuries on the screen. Let's get ready to rock and roll. What a day this is going to be. All right, let's go to live Q&A. No one gets left behind. Everybody gets a voice here. But what we're going to do, because we are extremely busy, we have to go to members only. It's only a couple of bucks to be a member. But if you want to have a say, I'm going to go members only because I can't answer every question from every Tom, Dick and Harry that tunes in just to scroll through YouTube. We have to focus on the investors, the ones that actually are here to make money, not to lark about and just scroll through the nonsense. So let's go into members only. Allow me 10 seconds to do it. Right. Now, please repeat your comment and question, and I will answer everybody's question as we go. No one gets left behind. No one is on their own. And if you want all my trade setups, how I'm in this position, and by the way, I've gone from $5,000 to 800,000 in 4.5 years, only 5 years now. And I've done that with no options, no shorts, no guessing, and no gambling. Here is my all-time wealth, including my debt position that I've got margin. This started at 5,000. This is my real money, my real position. You're looking at on the screen, $746,000. I've got 900 grand invested now completely, but we're in profit. Sorry, we're in margin, so we haven't made that money yet. But there it is. That's my real position. Hardly down at all. In fact, I'm always trending up, consistently outperforming the market and every hedge fund manager, every Wall Street manager, and very easy to beat Tom Lee and Warren Buffett and Michael Saylor. Right, easy to beat. Right. We are now in members only, so let's answer everyone's questions. 1970 Buckley. I'm sorry, Google doesn't work for some. Pretty easy to find out. What do you mean 1970? Maybe I missed the comment. So how can I ask for and pay for a stock review on HIMS? Right, you need to be a member, which you are. If you are an Electrum member, you can have it for free. When we get all this out of the way, we'll go back to reviews again, and we do 2 events a week for Electrum members where we play Spin the Bloody Wheel. It's literally called Spin the Flippin' Bloody Wheel. We spin the wheel, and if you're lucky, you get one for free. If, however, you would like to jump the queue and you'd like to get it done, the top bid now to get it to the top of the list is $20. If you do a $20 super chat, your review goes to the top. It goes to the top with the 10 facts, the full animation. It's not only analysis, it becomes its own event, own video, which will then trend on Google and YouTube, as we very often rank #1 for our reviews. Okay? That's how you get one straight away. Diesel Raider just joined. I said the market's in the dumper. I'm assuming no rate change. Absolutely right. Yes, mate. No change. We're waiting. We've got 15 minutes before Kevin Warsh takes the stage. We'll cover it live. Okay. Yes, mate. No change. 1970. Thanks, Dale. Spin the flipping bloody wheel. Absolutely. Full defense for me. S-Gov and Coca-Cola until the crash. Dino's. I think that's a great idea. I'm not telling you what to do. I don't give financial advice, but at the end of the day, I am extremely excited about that. And because we are on Robinhood, we're all getting our dividends 2 weeks ahead of the market. If you don't know what I mean, let me give you this link here. This is Robinhood USA and Robinhood UK. You get free shares. I get free shares. I'm not sponsored by them, but as of today, we're now getting our dividends 2 weeks ahead of schedule so we can employ them before the market pumps on them. Early dividend. It pays out tonight after hours. I'll be deploying this as long as Coca-Cola is down. I expect it to be. And it's another $1.5 grand, which will double because I'll then have margin and I'll have $3 grand. And on the 21st, I'll put another, I got $5 grand coming on income from YouTube. That'll become 10 grand. I'll put 10 grand into Coca-Cola. So another $13,000 going into Coca-Cola, which will take me very close to $930,000, nearly $1 million now in Coca-Cola, which makes me a 10x retail whale. All right. Okay. Let me send a quick message to my team to find out who is covering after I go live. So this is to Sensei. This is to Vaz. This is to Vaz. There we go. Guys, can you tell me who is following me after I finish? This looks like a short event. Could be over in the next 45 minutes to an hour. Who's following me? Sensei or Vaz? Because I'm going to watch the football in England, just down the road from me in Dallas. All right, there you go. So let's get ready to rock and roll. Let's go for all our positions. Let's have a quick look. We're waiting for Kevin Warsh to take the stage. He will be here live.
Page B12
here we go.
Of the newspaper.
This is where we'll be live, but we're not going to waste time hearing all the selling and all the nonsense going on CNBC and Bloomberg. All the contributors are all self-interest. Ethereum is down today. XRP is down today, despite all those influencers telling you the opposite. Bitcoin down today. SGov, short-term treasury, safe, good. The S&P falling off a cliff, holding up nicely, but a little bit down is Coca-Cola. No surprise whatsoever. VUG, value, the Vanguard Growth Index, it's basically the S&P 500 on steroids, is down. J&J, a defensive play that is not as effective as Coca-Cola. So there's my position. Hardly down at all. I'm very, very happy with that. Let me go back to, in fact, I'll just leave it there. All right, let's go for all the positions. And let me bring up on the screen our cheat sheet. Now, for those of you that are on... hang on, we've got a special message. Back to our cheat sheet right after this.
Marty tipped £2 through Super Chat. I see metals have totally fallen off in 5 minutes.
No surprise. No surprise, C. Marty. Thank you for sharing that. Yes, I don't buy commodities like that. It doesn't interest me at all. But yeah, very vulnerable right now. A crash, in my opinion, and recession is inevitable. Right. What am I seeing right now? Hang on. What was that? What the heck was that? 18. I didn't get anything. I thought I did. I didn't. Right. Okay. Let me continue. How long have we got? 15 minutes. Can everyone tap the like button, please? That would be amazing. And consider subscribing as well. Thank you very much indeed. 15 minutes for the FOMC report. Now, I'm going to give you this link here. If you want our cheat sheet and all of my trades 24/7, one-on-one support, live training, all kinds of stuff, 2-stage events every day, not a second one today because of the football, of course, but we had the first one earlier. These are the questions you were asking us directly from our cheat sheet. You can get 25% off right now. My Discordians, you have your own link. So what should I actually watch? These were the questions that you asked us. The language and the tone. We knew the rates would be the same. There was no surprise there. But what is important is the tone, not the rate. Have we got consistency? Have we got a transition of power? Does the Fed keep its easing bias? The hint that the next move is down or drop, how far does the median dot move? And does Warsh sound boxed in by 4.2% inflation or relaxed about looking through a temporary oil spike? Do not trade the first candle. The first few minutes is where most people lose money. Okay? I don't ever lose money. I've beaten the market for 3 years. This information is good. It is real. It's not influenced by influencers or sponsors. It's my real information from our real newsletter. This is what we use, and you know my results. What does it mean for crypto and stocks? Great question. What does it mean for crypto and stocks? The channels are the dollar and real yields. The channels are the dollar and real yields. A hawkish dot plot tends to lift the dollar and bond yields and pressure Bitcoin, Ether, XRP. These are our favorite coins that we look at. Everything else is basically a joke, if you want my honest opinion. Anyway, and high flying tech. A softer tone does the opposite. As the chart below lays out, for XRP in particular, the bigger 2026 driver is crypto market structure legalization, like the Clarity Act moving through Congress, not tonight dots. So how tonight moves crypto. Okay, so Bitcoin currently 65,000, Ether 1790, XRP $1.18. Hawkish, no cut or hike in the dots or a QT hint. The dollar and real yields rise and crypto sells off. Okay, if we're dovish, Warsh signals cuts and are still coming. The dollar eases and crypto squeezes higher. So that's the two outcomes that we can have tonight. Tonight's real story, the dot plot. Tonight brings the first summary of economic projections since March. 10 minutes ago, we'll be live with you, and my portfolio is looking great. Might even turn green again in a moment. All right, so for now, we'll concede and go red. But I'm very happy that I'll be green. Very happy indeed. In March, the median official put the policy rate at 3.4 by the end of 2026. I made my prediction there would be no rate cut this year. And I stand by that. Since then, inflation has run hotter and the jobs market has held firm. So that medium is expected to climb to show no cut at all this year. And a handful of officials may now pencil a hike. A medium dot that itself shows a hike would be the real shock. The dot plot. Here it is. We have it for you in our very own award-winning newsletter. Now remember, our newsletter doesn't just come as a newsletter. We have cheat sheets for special events every single day, either in your inbox, on a website, on the app. We also have Sensei's award-winning trading indicators. I use them all the time. I've beaten the market for 3 years, and I've beaten every hedge fund Wall Street manager out there consistently for 3 years, by the way. Not by a little bit, by a lot. The indicators are fantastic. We have a training course included for free. It was going to be sold as a separate product, but we decided that we would give it to you for free inside our newsletter. Now, if you are a Discordian, of course, you can get access to all of this inside Discord. It is an upgrade in Discord, but you get the best prices, plus you get the stage events from Sensei. Friday night, Sensei does live trading shows, all that great stuff. All right. So I'm just seeing, so I'm just waiting for an outcome from Sensei or Vaz. I still don't know who is going live. Can someone let me know who's going live? I don't see who's going live yet, fellas. Right, so make your bloody mind up. I need to know. Right, 5 officials. I'm not going to explain this. You can go in and look. deeper into your cheat sheet. The market now leans towards a hike by December. What if we get a rate hike by December? Well, think about that. A hold is 39%. One hike, 43% now. So, no rate cuts. We might get a rate hike in December, 43%. Not looking good. Of course, things can change, but that is where we stand today. Let me come to live comments and questions in the chat. We are in members only for now. Do you know what? It's not too busy in the chat for members' questions. So I'm going to open it up to everybody now. Give everyone the chance because it's not too busy. I can cope with it. So let me change this. Let me change this to everyone. Now, everyone can have a voice. Everyone can have a comment. Everyone can be part of it. Everyone can do a super chat. Everyone can be on the screen. Everyone can call in if you wish to do so. Let me know and I can open up the chat. So let me make it to everyone now can comment. There you go. Everybody in the chat now can comment. You don't have to sit there going, no one listens to me. I'm ignored. What's going on? It's the only channel on YouTube TV where every single person has a voice if they want it. All right. So we've got 8 minutes to go. So they want to watch footy, rhino skin. They're not allowed to. No, we are covering after me. That is it. Is football coming home? Yes, it is. That annoys the rest of the world, but the English love it. We're thinking more downward momentum leading up to the meeting. I absolutely think we're going to crash the market. Not today, but it's happening. And I do believe a recession is coming as well. Aloha, says Patrick. How are you? Lovely to see you here. All right. Let's have a look at all positions with just 7 minutes to go. So my portfolio is about to, again, beat the market again. All right. The S&P is falling off a cliff. We said it would. Virgin Galactic is rallying today after SpaceX sold. That is a gamble trade. It could go bankrupt now. Please be careful. SpaceX. We had all the influencers roll out this morning. Meet Kevin last night said it's the best meme stock to buy. And the moment he said it, it went down. Utter nonsense. Ron Barron said it because he had it for sense. Ross Gerber said it because he had it for sense. I told you the truth. The truth is it's worth 50 to 60 bucks. I have one share of SpaceX, and when it goes down, I will be buying it, but I'm not a bloody idiot paying 220 bucks because a bunch of influencers who are greedy and selfish liars tell you to. There's the truth. There's the truth. You got it right there. All right, take it to the bank. Palantir is up. Money's going back into Palantir. No surprise. It flows in and out of SpaceX like a blue-ass fly. Gold went up on this and sold off on the announcement. What does that tell you? In my opinion, absolutely sod all. But anyway, you can decide. Amazon going down. Apple going down. Enphase Energy going down because there are no rate cuts. We kind of knew that anyway. Coca-Cola going back up. I'm loving it, loving it, loving it. All we need now is Ronaldo to go, oh, Coca-Cola. That's what he did on the last World Cup, and we lost $4 billion. Remember that? Ronaldo, the sponsors who pay to put bottles of Coke in front of him on the press conference, he pushed it out the way. I mean, the arrogance of it. He's a multi-millionaire because of the sponsorship deal, but because he doesn't like it, oh, Coca-Cola, he pushed it out the way. It cost $4 billion that day. It was great. It went down and we all made money on that. This was before I was broadcasting, but yeah, I was trading a long time ago and made money out of that. Thank you, Ronaldo. Let's hope he does it again. J&J going down 1%. We've got 5 minutes to go now. Chevron Oil down. Tesla going down because they're now realizing Tesla could be $80 when SpaceX takes over. Not all defensive stocks are doing well. McDonald's doesn't do so well. That's why I buy Coca-Cola. Google going down. Microsoft going down. We sold it. We took profits. We warned you of it. Meta, look at that. Going to $800, but not in this climate. Nvidia, I'm about to buy. Okay, good stuff. All right, it looks like Vaz is doing it. So Okay, Vaz, can you confirm to me, are you going live after me? I'll send everyone to you. Just let me know. Let me do that for Vaz. Let me see if Vaz is doing that. Okay. I spoke to Vaz earlier, Sensei. He said he was going live on Friday, not today. Have you heard that from Vaz? Because I haven't. Okay, Walmart going down. Tilray Brands going down. No surprise. Robinhood, I've no idea why anyone's buying that at that price. Vertical Aerospace up 3%. You'll hear about all these today if Vaz is covering it. I am not going live. Vaz, oh, you're not going live. Right, so it's Vaz then. Right. Archer Aviation, Bitcoin. What's this? I've just got a picture here. Right, I did not realise the FOMC. No. Yeah. Whoops. Bloody hell. Hang on. Sensei, that was sent to us before Discord. In Discord, he was there telling us he wouldn't go live till Friday. So we've not got any confirmation from him. So if you're not going live, then it'll just end after this. Okay. All right. 3 minutes to go. Bitcoin is down 0.67. What? Why? What? No, sorry. I'm away now. I didn't know you'd be ending early. Okay. XRP, Ethereum. Let's have a look. Oh, I'm back to there again. Okay. 3 minutes to go. Let's get ready.
Maybe very different. He's going to say, I am not.
We're about to bring you the speech live from Kevin Warsh. Stand by. It's about to commence. Get ready for an explosive afternoon. Okay. No worries at all. What price will you sell Coca-Cola? I'm not sharing that on the screen for clicks at MSI. That is shared exclusively for my Discordians and my YouTube Electrum members. All right? That's it. It's only shared for my YouTube Electrum members and my Discordians. We are not here for clicks or clickbait or excitement. We're here to win, and that's how we trade, and that's why we have 800 investor members, some whales as well, from very small members to whales. All right. Okay. So, here we go. 2 minutes to go. This is now our closing bell show. There will be no closing bell show, of course. This is it. And then we're watching the football. If you want to follow me on Instagram, if you want to be part of it with me, behind the scenes and all that kind of stuff, my personal stuff, it's subscribers only. It's 99 cents behind the scenes, so we don't have any lunatics and idiots. Here it is, the Instagram, if you wish to join me there. So you've got the YouTube TV for the main shows, the training courses, the trades, the one-on-one support, the education, all that great stuff. The community, the gaming channel where you win free Luca coins, stage shows, 2 a day, all that great stuff. That's Discord. Or if you want personal, behind the scenes, away from the studio, that is Instagram, and it's 99 cents. There it is. All right. Okay. Here we go. 1 minute to go. We're on standby.
Because that's what drives our earnings over time. And we've talked about this, but you're talking about this upcoming earnings season, another 20% plus earnings growth.
Wow.
I think that's going to be...
Paid influencers, I can't be bothered to listen to them. They talk rubbish. Okay, here we go. 45 seconds to go. It's time for the FOMC Report live with Kevin Warsh. He's about to take the stage for the very first time. We're going to cover it live with you. We're going to bring it all to you live. Most important is not what he says. Apparently, it's going to be quite a short statement. It's what comes next at the conference, how he addresses the press. That's what it's all about. The market has gone down today. If I share with you on the screen, everything we told you would go down has gone down. We've beaten the market again. Coca-Cola is the outperforming. Defensive is the way to go. The S&P is falling off a cliff. Crypto's going down. I'm about to do some major trades, $900,000 in Coca-Cola.
That's going on.
Let's get ready
We're building out the
for
next
Kevin
generation of
Warsh,
technology.
who goes
And
live
whether or not these
for the
interest rates
first
move up a
time
quarter, a point,
for the Fed.
that's not going to have a big
Any
impact
moment
on their,
now. Please stand by.
businesses.
Here we go.
Can we talk buzzwords, David? Are we at that point even? Do we have to just wait and hear Warsh at his first conference to know what buzzwords might be for the future? Or is it going to be the usual things that it hints of hawkishness
Let's see
and
how
that
he
with more selling
addresses
pressure and vice versa?
the press
I think it's going
and
to
the
be
waiting
interesting to see
world
how
for the
he
very
responds
first
to the
time.
questions, as he said. Like,
Stand by.
people are going to see what's the character of this guy as Fed chair. Doesn't matter so much what words, but how does he handle it?
And I think we better stick around in case it's over in 5 minutes.
Here we go.
But here comes new Fed Chair Kevin Warsh.
Good day. It's an honor, a true honor, to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something: a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6 at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall and hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Colby. Thank you so much. Colby Smith with the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like a encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and, forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market, but broadly I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year. And the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces. Communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say, I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do, because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely.
Finally, somebody
and what are the
talking some
tail
bloody
risks.
sense. Numbers,
Financial market
data,
prices
not opinions.
Are probably the most important
that.
source of information to guide central bankers.
Intelligence,
but when all the financial markets are doing is reflecting back what we've said,
not bloody
then we're
guessing.
taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data, they'll come with better information through market prices to us, we can make more informed decisions. But ultimately, the goal that I said at the outset, deliver on the price stability objective that Congress told us to do, and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Claire. Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first-order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job, that's our commitment, that's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the president since you're swearing in?
So on the president, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Bessent to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve Leisman, CNBC. Mr. Chair, thank you. Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
Nick.
Thank you. Nick Timmeros with the Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Andrew.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this we come up with recommendations, which Fed staff have already begun to develop, about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay, thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and to make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria.
Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what the expectations for inflation being higher and also potentially growth being slower?
So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then, and I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. The commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay. But I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one, and by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Going to end up for the last question.
Thank you, Mr. Chairman. Andy Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about the kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs, and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation in the last 5 years, are in the rearview mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
Mr. Chairman, strong labour data in recent months. How would you sum up the labour market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Okay, there we go. Let's wrap this up. And what about it? The first Fed report from Kevin Warsh. And like everyone said, we have a task force for that. Well, we do. We do have a task force for that. And what we're going to do now is we are going to send you over to the extra channel to let you see what you've just missed throughout today. We had a big debate about Dave Ramsey today. So I'm going to give you the extra channel and send you all there automatically. And then we are going to have our final Discord event of the day. And then it's time for the football. England in the World Cup. So that's what it's all about. So live now on Extra. As we end this stream, it will play you today's shows, what you missed, live, and you can be part of the live conversation. There it is. So it will take you there in a second. Click on that link, and I'll restart it when this ends. So don't worry, it'll be the latest information. So we replace that. What I heard there was a very new look at the Fed. And I think it's best to wait for reaction, not going to vote with my trades just yet. I want to see what the task force does, and all the other things he mentioned. But I think the market is testing him. We are seeing the S&P fall off a cliff this afternoon. I'm glad I'm not in it. I do think a crash is coming. SpaceX from 220 to 197, good, because it's ridiculous. I want to buy it at a fair price. Palantir coming down, gold coming down, good. Amazon coming down, good. Apple coming down, because I am going to get my bounce on Coca-Cola very shortly. It's the one thing trying to push up. This is good. And we now know the early dividends do not come until after hours, because I'm still waiting for my early dividend payout. It's a new feature on Robinhood. There it is, early dividend. It will come after hours, and I will deploy it, be about $5,000 across my different portfolio, the Roth, the IRA, the ISA, and I'll be deploying, and I will be buying Coca-Cola tonight. As you can see, it's going up. I want to get it quickly though. I'm going to buy another $5,000 of Coca-Cola tonight. My trades will be shared with you on Discord in a minute. And then on the 21st, which is Monday, I get another $10,000 to buy another 10 grand. That will take me to about $930,000 in Coca-Cola. Just about to hit the 1 million. All right. So it's about to happen. I told you I'd get from $5,000 to 1 million live on the show, and it's about to happen. 3 years ahead of schedule. Okay. Cautiously optimistic, Richard. I think that was a good reaction. Yeah, wait and see. Steady we go. But yeah, there is a pullback coming. There is a crash coming. No question about it. I actually think there's a recession as well. There's a good chance of that. But that's why I'm 100% in Coca-Cola. I'm in defensive. I've beaten the market for 3 years on a row, and by some measure, 2 and 3x the market. So I'm not just beating it by a bit. I've done it by a lot. So we're going to go into extra now. You've got it linked to the top. I gave everyone the discount if you wanted the newsletter and the cheat sheet and the trading indicators and our Discord, which is where we're going now. We do one-on-one training, support, and everything else. If you want to follow me on X, there's X and Instagram. Instagram, there'll be some behind the scenes tonight. Whiskey Wednesday, Burger Batty Crazy Football Wednesday. On Instagram, for my subscribers only, it's 99 cents. I have a private community of just under 100. I was hoping to get 100 tonight. But anyway, I'll see you on Instagram in a bit. Some private members only footage of the football. England are playing just down the road from me in Dallas tonight, which is where I am. So very exciting. Anyway, how much is margin, Martin? $1 million. $1 million. No, about 330,000. A third of a million. Yeah. A third of a million at the moment in March. I can show you on the screen. Yeah, I'll just show you. There you go. There. 357. 357. All right. Very happy to do that as well for all the reasons I've given. All right. That's it. Thank you ever so much, everyone who gave a super chat today to support me and my wife's 8th wedding anniversary, which was yesterday. And tonight we're going out for dinner after the football.
A Defense 89 tipped $2 Canadian through super chat. But what's your take on new Fed chair and economy?
Well, to answer your question, I still think we're going to have a big pullback. I still want to be defensive. I'm not buying into all this nonsense of SpaceX. I've got one share. I'm buying it when it goes down. I'll probably buy 100 grand of SpaceX when it hits a sensible price. I thought the chair is a very different approach to Jerome Powell. I liked it. He's got a different style. I think he's going to modernize the Fed. He's taking his time. I like it. Calmly spoken, but again, presentation isn't everything. I want to see performance. I want to see how he reacts when the market pulls back. I want to see what he does. I want to see the way he addresses, things over time before I jump. But I'm genuinely happy. I'm genuinely okay. I do think the economy is in a bit of a bad state, though. I do think we're going to have a pullback. But that's economy and the stock market are two separate things, by the way. So, I'm talking about the stock market, really. Okay, let me send you all over to Extra. It will take you there live now. The moment it gets there, you will see the screen change. I will stay with it for a couple of moments because I'm actually going to change what you're going to watch. You're going to watch when we debated and talked about Dave Ramsey this morning, and then I'll be on Extra. Sorry, I will be on Discord. I'll set it up now, actually, in 9 minutes. So stage channel, pro event, next. Well, what now? I'll call it. Okay, well, what now? That is 2:30. 2:30. Well, what now? There we go. Because the football starts in half an hour, so it's a quick one. Well, what now? And there you go. Send that there. Send that there. Send that there. That's in 9 minutes. Copy the link. Drop that in there. Just a quick catch up for our members and set up our trades, which we don't share, of course, on the main show. Lucasade and at everyone live now. I will actually start it earlier. All right, guys, I will start it earlier because I want to get through what we have to do before we go to the football. All right, and I'll be on Instagram for my members and behind the scenes. That's my private life, which I share for my Lucasades, my Insta Lucasades. All right, that's it from me. Okie dokie. I'll see you all on Extra. Thank you much indeed. You've got the link. I gave it to you. I will reset the screen in a second. So as you get there, give it about a minute and you'll see it change. All right, everybody else on Instagram, Instagram in an hour behind the scenes of my private life. But there is Extra right now. It'll take you there or click on the link. Get ready for it to change. I'll see you on Discord in just a couple of moments. That's it from me. Till next time, as always, take care of yourselves and each other. But some of you, I got a message. Someone wanted the Instagram, wants to join the personal side of me. If you want the full package, there we go. Instagram, there's the link. Right, that's it from me. I'm out of it. Take care of yourselves and each other. Bye-bye for now. Here we go.